Well, hello again, everyone. Welcome to the Options Mentor. And the market continues to give us a wild ride, mainly bearish, of course. Really a lot of just capitulation, I would almost call it, in the market. I don't know if we're already there, but I think we're probably getting close to where we should have a more significant rally, like I talked about last week. That didn't really materialize this week. I would keep that trade I showed last week, though. Go back and look at that video, folks, because when we do get that bear market rally, I think it'll be a good trade. It didn't happen this week like I thought it might, but it's out there and it'll happen sometime. So I'm going to talk about this week ahead and the fact that we could still have some pretty significant movement. We have an FOMC rate decision Wednesday afternoon. Most of the market expects them to do nothing, so they probably won't do anything. I mean, there's a lot of reasons they should raise the rates a quarter, and they've hinted at doing it, but I don't think that they'll surprise the market. They normally don't like to do that. So it will probably be no rate hike. So the market will pay a lot of attention to what they say in the meeting minutes and what they say their forward guidance is. And also there will be a press conference with the Fed chairman 30 minutes after that announcement at 1:30 Central, 2:30 Eastern this Wednesday afternoon. And sometimes they'll go off of what he says or doesn't say in those comments. Also, just to add to the fun, Apple also reports this week, one of the big components of the S&P, and not sure where that's going to go, but we definitely want to keep an eye on that. So let me share my screen here, so we can see what the movement that we've had, that the SPX is just really gone down to some really support here at 41, pretty far down, right? Blown through a lot of other support, and consequently, the VIX has spiked up to a near-term high. We haven't been up in this area since back earlier in the year, in about mid-March, early March. So a lot of volatility. You can see over here that the VIX is 21.27. That shows an above average fear in the market, at least how it has been lately. And that's really what the VIX is. It's a fear index created by the CBOE, Chicago Board of Options Exchange, back in the 90s. And it's just based off of people buying puts, selling calls, other things that show they're worried about their long positions. All right, so for this week, I want to show something. It can be a little expensive if you do it in SPX. If that makes sense for you, go right ahead. But I'm going to show it in SPY. SPY is, of course, 1/10 the size of SPX. It's also an ETF. An ETF trades like a stock. So an ETF, you can be assigned in an ETF. You can't be assigned in SPX. It's cash settled. So just keep that in mind. I don't expect any of you to get assigned in this, but be aware that, if you're deeply in the money on calls or puts that you were short and you get at the end of the week, late Thursday, Friday, that possibility is there. So anyway, the setup is this. If we go over here and we look at the expected move just by Thursday, November 2nd, it's just under $9. What's the expected move? Well, that's kind of what the market makers think the larger end of a move would be based on pricing pressure. But they can often be wrong. It might not move that much. It might move a lot more. But I have found over time, it's a pretty good barometer and something worth using in trade setup at times. So that's for this Thursday. So I'm going to show you a setup that's actually for a week from this Friday. You go, Mark, why would you do that? Well, the reason I'm doing that is because this longer duration makes this line a little bit more friendly. Meaning that daily you don't lose quite as much money in something that doesn't expire for another almost 2 weeks as you would if, say, look what happens if I put this on this Friday. So if I put it on this Friday, you can see lots more movement against you if we get to the fringes of this trade. The fringes being the expiration break-evens, where this expiration graph, the blue one, crosses this zero line. So that's why I picked to do it with the 10th. because even with the 10th, we still get time decay between now and then. And indeed, if you watch this trade would be about $160 if you got filled around the mid as it shows now in the call butterfly, and around $56 debit plus the margin in a put butterfly. Because these butterflies are not equidistant from the short to each long, they're asymmetrical. Well, what happens with that is the call, they just put it all in the debit. But with the puts in an asymmetrical fly, exchanges, or excuse me, brokerages, margin it like it is a call and a put, a put debit vertical and a put credit vertical. For whatever reason, I don't know why they do that. So they give you a smaller debit plus margin. But if you look at this, $98, $56. So this is going to be about $154 trade. So it's very similar in price to this. This one's all in the debit. So if you put these two together, you got just over a $300 trade in the trade combined. I'd like to get 8 or 10% of that and then get out. So if we just go to Thursday, you can see we're already closing in on that. In fact, you may even have it if the FOMC caused the VIX to come down. If volatility comes down, it can be very friendly to your fly, which is, as you can see, short Vega, meaning if volatility goes down net in the options you're in, that's good for you. And at every point it goes in your favor would be about $9.50 in profit. Now, that's not realized immediately. That would just show up in your P&L. So that's why I like this trade. Even though it's for a week from Friday, it does give us the safer path through the week if it does get out to the fringes. And also, it still gives us that opportunity to get out of this thing, certainly by Friday at 10%. I think we got a real good chance of that if we don't, get knocked too far out of bed, which I don't know that we will. But so that's my idea. I really think this week, I don't mind having a little more room on the upside, which I do, right? From where we're trading to my upside break even is about 950. On the downside, what is it, about 850 or so. So you have a little more room to the upside than the downside. But if you look at it, you can kind of see why that might be appropriate. Yes, no one wants to catch a falling knife, right? We don't know when this is going to stop, and it can continue. But what you try to do in trading in general is put the most odds in your favor. That's all you're doing. Do everything you can to make things safer for you. If you're going to take a vacation in your car, what do? Well, let's make sure our tires are good. Let's make sure our car is working, fundamentally well. Let's pick the best path, the best time of year for whatever we're doing. All these things to put things in your favor, even though something can go wrong on your vacation trip or in the market. This gives you a better chance if you at least look to what your risk could be and try to give yourself a little better chance. And that's what we're doing here. So the idea with this one is a put calendar, put it on. And I did this, what is that, roughly about $4.50 below where we're trading is where I centered it, 406. I went up 6, down 7. And then on the upside, I went about $4.50 above where we're trading or so. And I went up 6, down 7 with the wings. So do something similar to that if you want to try a trade like this. If it makes sense for you, you could always make it larger too, meaning more contracts, up to you and your risk tolerance and what level of training and what makes sense for you. But that is my idea for this week. A nice double fly. I don't do these a lot, but sometimes I think they can make sense in a very high volatility environment because it gives you room. Also some short Vega. As I said before, and I say in all these videos, this is what we do every day over at SheridanMentoring.com. Check us out. And I will be with you again next week. As always, please continue to subscribe to my channel, like the videos, send me questions. I get right back to my questions in the comments. I love your comments. So put those in there. Smash that subscribe button. Tell your friends. And I will be back with you again next week. Have a great trading week. And this could be a fun one also. Bye-bye.